It is Tuesday, and today we're going to talk about, well, a quick overview of what's happened in the portfolio and why I'm down $600, and then a quick market outlook and plan of action for the foreseeable future with this account that's going to a million, starting from 31,000. Um, I haven't added money in a long time into this account since about, I want to say October, November, something like that. So that's a couple months, and it's been a really slow winter for me, so I don't have any money to add, but that's another topic. Let's start with the portfolio here. The big things that happened over the weekend is that a lot of my puts sales expired, so now I have $8,600 to play with, which I'll be re-rolling into more options, and I'll talk about the plans in a minute. But first, what else happened? Let's go to the history, and I'll show you which options expired. So we have the Russian market $17.5 option expired. The royalty income fund $60 option expired. So that was like $40. That was like $20, 28, I don't know, some dollars. That was another, I want to say, I forget, it was like $25 or something like this. And this was also like another 25. So it's a good chunk of cash. But, you know, I guess slow and steady wins the race. I'll be looking to re-roll all of that. It looks like this was probably gonna expire on oh never mind, it already, yeah, on February 15th. Doesn't look like silver's making really that big of a move. So that's what happened. I haven't really done anything yet. I'm just kind of sitting on the money, just thinking of what to do. In the meantime, I was assigned to buy a lot of shares of EXK at 250, which is not that good in news. As you can see, it's at $2 right now, and the premium does not cover. I'm not breaking even. My break-even price was about 2.2, and my average cost of purchases is 2.28 for the Endeavor Silver. Now, this may or may not be coming at a good time because, um, well, let me just finish with this portfolio here. Apple dropped, on the other hand, over 2%, and that is now my biggest holding. So that's almost $300 of the loss was due to just Apple alone. As you can see, I have 100 shares. I have a call sold against Apple though at 165 for February 15th, and that gained six. What is that? 63. I can't read this far. I think $63. So that kind of mitigated the $332 loss a little bit. So it's helping. Now Spotify was about flat. I also have a put sold on Spotify. So as you can see over here, um, $2 up today for a total return so far of 117, which is 42%. I still have $158 of liability to work through by February 15th, excuse me. Other big players, margin a little bit red, a little bit green all around. It's kind of a mixed bag. The rest of my portfolio really didn't drop as much as the market. You see the Aussie market dropped like 2.4, but I don't have much holding. The biggest killers were uranium, of course, energy fuels. They dropped about 23 cents, almost 8%. That was kind of a big loss, minus $138. I still have contracts sold against um, energy fuels, and I will be forced to execute that, I think, at $2.50, but it's all the way out in May or something, April. So I don't have to think about that, but I'm on queue to buy more energy fuel. And the rest of the uranium sector did not do well. URG went down 4%, chemical down 2.45, which is pretty good. I'll talk about that in a sec. The whole entire business of uranium was down 2%. China down to 2%, and Alibaba down 3%. So not a spectacularly happy day, but wasn't terrible. Not as terrible as some people's portfolios. All right, now plans. It seems like the market's been going again. As I'm looking at the aftermarket trading, those precious metals have been going up relative um, to the market. When the market goes down, precious metals tend to go up, and I can see that in the aftermarket right now. So you can see over here it's going up penny, but I'm watching the spot prices and it's up like a few dollars. So which is kind of good news for this purchase of EXK. So I'm hoping that the price goes up high enough to where I can sell calls against it at 250. Try to make this a really positive trade because I'm sitting on over $4,400 worth of EXK right now. It's kind of a lot for this account, and I'm gonna try to reduce that position a bit. It's 2,200 shares. It's quite a bit. All right. Um, Plans for Apple. We're just gonna hang tight. We're gonna let it drop. If it drops, I'm gonna let it ride until February 15th. If there's a big drop, too bad. We're just gonna collect that $135 and then look to sell puts against Apple in order to collect some cash with some leftover cash if we have it. Um, Unless I use the money for what has been my biggest option money maker so far, which is Cameco. And if you remember, I was forced to sell Cameco at $12, which worked out just fine, right? As you can see, it went up to like 12.45, but I was forced to sell at around $12 here, and then it had a minor bump, but now it's back down to 11.50. So if it keeps dropping, I'll be able to sell puts against it pretty profitably. Like let's take a look at a possible trade that I can do, right? So if I sell put at $11 right now, let's say February 15th, which is when a lot of my options run off, you can see that's 25 a pop, and I can pump out like seven of those or even eight. You can see that's like a couple $100, and and then I can sell call against it again because the price of Cameco, and this is how I plan on making money in a neutral market, which has been my thesis uh, for the next 10 years. Basically, I think we're gonna have a pretty go nowhere market. So I'm thinking that I just keep selling puts and calls against my assets. Um, so at $11, and that's $25 per contract, and that's almost a couple $100 that I can be collecting until February 15th from Cameco. And if it drops down to 11, I'll be happy to have it at 11. I'm not going to be mad at it. If you look at the long term, you can see how this is the 5-year chart. You can see how it's been hanging around this price and steady, slowly gaining. And if it drops down to this level, fine. Look at it in the micro chart here. Let's pull up the yearly chart. You see how it goes from 9 to 12 to 950 to 12 again, 1250 to back to 1075 up to 1250. You can see how there's, this kind of pattern forming. So this relatively flat market is perfect for me because it's kind of considered a more volatile company um, than it actually is, and it's a good target for me. But again, don't by the way, don't base financial decisions based on what you hear here. I'm not a financial advisor, and you need to make decisions based on your own situation and do your own research, etc. All right. So that's a really good candidate for that $8,000 that's sitting right now. But I might wait for the market to drop because I'm anticipating a pretty big drop probably this week, considering the Monday was really brutal. We might get a little snapback rally tomorrow, and then the downward pressure is most likely to continue. I've been listening to a lot of experts again, a lot of contrarian opinions, and a lot of big market like hedge funds, whoever decides to make their information public. and they're the opinion that it's gonna, keep rolling over. There's nothing really supporting the market besides the earnings, which some of them are positive. Like, IBM came out today with some positive earnings, but and before that, Netflix and Goldman are not doing terrible, but not every, the retailers are just getting crushed, which, yeah, Amazon, this and that, but it's a mixed bag out there. It's not certain how the future is going to roll out, but because of the higher rates now and the balance sheet of the Federal Reserve rolling off, etc., most people are thinking that the downward pressure, this is definitely a technical signal, technical selling today, so it's most likely going to continue after tomorrow's rally, reverse of Tuesdays, etc. I'll be curious if that happens, but I'm not going to mind this short-term volatility. I'm going to try to just ride it out through my options plays and eat the crash. I want to just eat it because I don't want to miss the upside. I'd rather eat the crash than miss the upside. Plus, I'm so hedged, right? Well, I'm not so hedged, but it's possible that EXK and Wheaton Precious Metals drop with the market, but they haven't been acting with the market this year and throughout the entire crash. So I'm very suspicious of them, going down with stocks overall. They might be pulling off a gold in 2008 where it appears that it was not correlated, in fact, inversely correlated, where the market would go down and gold would go up, and then gold just crashed, but it didn't crash as much as the market. Something like that might happen, um, but nevertheless, I'm holding on to these positions, and hopefully they pull me up. You can see I have 4,400 here and 4,400 in EXK, so that's quite a bit. That's almost $9,000 of the portfolio is those two companies, and they're, one of them is a streamer, gold and silver streamer, and the other one is a miner, silver and gold miner from Mexico. So that operates in Mexico. It's a Canadian company, EXK. But I'm hopefully that helps me through the crash. And I'm just gonna eat it. I'm eating the crash, and I'm just gonna do my option plays and not mind it. I've tried to purchase insurance before, but it just gotten bit in the behind. It just wastes a big waste of money. And of course, the one time I don't purchase any insurance, um, the big crash is gonna come. But we roll with the punches. That's what we're gonna do. So that's the plan. I gotta stick to the plan. Need that discipline. All right. So that is the future. That is what I'm gonna do. I gave you a little bit of um, overview of the what's happened in the portfolio here, and I'm also gave you the market outlook and my plan as to how I'm gonna handle it, which is basically eat it. So hopefully tomorrow is a good reversal Tuesday, and I'll make another video if I happen to hit a new record, which might happen on reversal Tuesday. It doesn't take much. The all-time high was 47, I think 250, so maybe we can break that tomorrow. We'll see how it goes. All right, that's it for now. Peace out.